Hi everybody, welcome back to Anjana's Stockpedia. Today we will discuss about how to trade in a triangle pattern. Before that, if you are watching my channel for the first time, please subscribe the channel and press the bell icon for the further notification of new videos. The triangle pattern is one of the most popular trading patterns ever used in the trading community. Like now, really, most of the great traders uses this in technical analysis forever. And there is definitely a reason for that. One, it is a very easy pattern to spot. Just two simple trend lines that come to an apex. So, I'm sure you have used one before. But this video isn't about what a triangle pattern is. It is about my secret tips I use myself. Absolutely take advantage of this one simple pattern. I am going to sharing different ways you can optimize this pattern and insanely benefit from it. This video will help you a lot. Let's get straight to it. So, start us off. The triangle pattern can come in three different forms. The symmetrical triangle, where it's symmetrical in shape and not really trending in one direction. Then there is the ascending triangle, where the price actions will slowly start moving in the upward direction. Then of course you have the descending triangle, where price action will slowly start moving in the downward direction. So my very first tip involves the apex point, which is where the two trending lines meet up. In most cases, you never want to enter a trade if the price action goes beyond the apex. The whole reason why the triangle pattern is so good is because of the trading momentum that happens inside of it. What I mean by that is, for an ascending triangle for instance, buying pressure keeps getting stronger and stronger over time, making the buyers have more and more control as price moves up. Same thing with the descending triangles. Here, selling pressure is getting stronger and stronger as time goes on. All of this tension is building up, and so once price does break this trend line, it moves insanely fast and has a lot of momentum behind it. And if the price never breaks the trend line and then just moves sideways into the apex point, all of that tension is now lost, and it will be extremely hard to predict price movement afterwards, as the chart will start moving sideways. My next tip is an absolute game changer, and if you use triangle pattern, this will completely open your eyes. We want to just put an indicator. What it does is automatically draws the chart patterns for you. It can do channels, pennants, wedges, everything. You just want to go to trading view, then from indicators select chart pattern triangle. Add it your chart and select whatever preset you want. The larger the preset size, the more indicator will go back in time and larger the actual pattern. You can also manually change the sensitivity or deletion period of candles. If you want to be a little more exact with your patterns and not use a preset. Once you play around and find a preset you like, the indicator will automatically draw all the patterns for you whenever one is created on your chart. Once you see the lines drawn on your chart, the indicator will actually automatically notify you with an X to let you know that price is breaking the pattern. This indicator is great, and I would absolutely recommend it to anyone who uses patterns when trading. Now, the next tip is you can actually use the size of your triangle pattern to predict where to set a take profit. A lot of the time, a triangle pattern will go up or down the amount based off its size. When it breaks out, so say if your ascending triangle pattern is 100 pips, you can set your take profit 100 pips from the breakout. A lot of the time, when price does break out, it will hit this take profit with ease. Same thing does with descending triangles. Just measure the size of the triangle. Place that measurement where price breaks downwards. That's where you place your take profit if you wanted to short. Here is a real example. So you can see a triangle was forming here. Price accuracy is slowly starting to accumulate more and more momentum. Once that momentum builds up so much, it breaks the pattern. So we grab the rectangle tool, measure from the low to high of the pattern. Then place this at the breakout point. Now we have our take profit level and look what happens. Price hit it with ease. Here is a short example. Price is building up downwards momentum, breaks the trend. We measure the pattern size, plot our take profit point, and looks what happened. Price gets there. Don't be surprised if the price goes a little past your take profit point, as it will happen sometimes. Don't get greedy. It should also be said, triangle patterns on higher time frames like the daily or weekly will be way more predictable and will have a higher win rate, as it takes a lot more volume to create this. So they will be a lot more reliable. Also, the profits will be a lot bigger. As the triangles will be bigger, so it really is a win-win situation. I will definitely suggest finding patterns on the higher time frames and using this take profit tip. They will work on lower time frames as well. But like I said, they perform a lot better on higher time frames.